In San Francisco, this is Bloomberg Technology. Coming up in the next hour, Target 2020. Microsoft says an Iranian government-linked hacking group targeted the email accounts of U.S. presidential candidate. We have the latest. Plus, jobs in the tech sector. The U.S. adds 136,000 jobs in September. That's less than estimated. But one job-seeking company says there are almost 1.5 million more jobs than unemployed people. We look at how the technology is changing the job search. And shelter from the trade storm. Taipei-based smartphone maker HTC says it's more sheltered from trade tensions than its U.S. or Chinese competitors. We hear from the HTC's CEO. But first, our top story. Microsoft is exposing a foreign power for trying to hack into a U.S. presidential campaign. The tech giant says computer hackers linked to the Iranian government tried to infiltrate email accounts of a U.S. presidential campaign. Current and former U.S. officials and journalists. 4 accounts were compromised by the group called Phosphorus. To further discuss, I'm joined by Bloomberg Technology Executive Editor Tom Giles. So, Tom, does this show basically that we haven't done enough to look at election hacking?
It's going to be a big issue. Election security and protection against foreign interference in election has been a big issue, and it potentially will be even a bigger issue in 2020. All kinds of ways for foreign powers to get in and muck around with U.S. elections. We saw it here today through what Microsoft talking about, the hacking possibility. And again, we saw that in 2016, right, with Russia. So we're vulnerable there. Election, just the mechanisms for voting, that's another area. And certainly misinformation. And not to mention the President of the United States inviting foreign actors to come and interfere on some level with the election. So yes, we remain vulnerable. And as far as hacking and cybersecurity in particular, definitely going to be an issue. Great to see Microsoft staying on top of it and making us aware when they found out about it. How much more is there out there, and how many other foreign actors will try to use cyber insecurity to infiltrate?
Well, did Microsoft do the right thing by sort of coming out and getting ahead of it and saying, look, we had this threat, here's what happened, instead of trying to hide it, like maybe what happened in the 2016 election?
Well, as far as, I think you're referring back to some of the social media companies, right, that I don't think really were aware of how their systems were being used, how sort of serious the threat was from misinformation in the 2016 election. I think they, as a general rule, have become much more aware. They're trying to be much more proactive. Microsoft is an interesting story as well. They've really tried to be establishing their bona fides when it comes to cybersecurity questions, and this is them absolutely trying to get out there and say, we're being vigilant, we're trying to keep tabs on the systems that we have access to.
Does this show that cyber attacks are sort of the next frontier for elections?
It's certainly one way that foreign powers can get in and interfere and try to sway the outcome to their advantage. I think Russia was a great test case. Not great's not the best word, but was an exemplar test case for this happening in 2016. Absolutely.
What is the feeling on Silicon Valley? Is this sort of the normal course of business, or does this show that there's still a lot of more work to be done? Can they just sort of go along with it?
Well, every time we talk to an executive, we ask them, what keeps you up at night? Oftentimes, one of the first things that they say is cybersecurity. Cybersecurity within our company, for as far as our customers are concerned, the supply chain is concerned. They have other concerns as well, but cybersecurity is oftentimes one of the first things that executives will tell you that they're concerned about. And certainly this is one that we're going to be keeping our eyes on for 2020.
Bloomberg Technology's Tom Giles, thank you for joining me. And President Trump is using social media ads aimed at his impeachment defense to instead raise money for his re-election campaign. Trump's campaign has spent hundreds of thousands of dollars on ads on Facebook and Twitter. Here to explain is Bloomberg News editor Wendy Benjaminson from Washington. Wendy, talk to me first a little bit about the D.C. angle here. The ads on Facebook and Twitter, what was interesting is it takes you to a general re-election campaign. It doesn't take you to an impeachment ad. What does that show you?
Well, it shows that President Trump considers this to be a political fight and not as much a legal one. The ads say, defend me against impeachment, and yet then go on, if you click on, defend me against impeachment or whatever the link is, it takes you to his re-election campaign site where you can donate to his re-election. And the language is very much about, defend American greatness and things like that. But that's, it is definitely a re-election effort.
Since the impeachment started heating up around September 14th, what do the numbers show us about how much more money has been raised specifically through these online companies like a Facebook or a Twitter?
Well, he had raised $5 million so far since House Speaker Nancy Pelosi announced that there was going to be an impeachment inquiry. I believe he has raised $5 million, I was just checking my notes, in small dollar donations that have gone to his re-election campaign through these ads.
How is ad spending doing? Are they using companies like Facebook more so than Twitter, given its size and scope?
I think they're using just about everything they can get their hands on. So yes, Facebook, Twitter, Instagram, YouTube, they're going everywhere with a big effort. They've raised also $7 million through super PACs for this effort. So, there'll be lots of money to throw around.
Wendy, I wonder how much more strict we've come since the 2016 election, specifically around ad spending. What have we learned from 2016?
Well, I think we've learned, as you were talking about in the last segment with Tom Giles, is that you need to be very careful about who the actors are and where they're coming from. I believe that Facebook and other companies have taken some steps to figure out if it's really President Trump advertising and not, a bot from a foreign country. But that is still a concern. And the campaigns themselves, I don't think have the greatest cybersecurity. They are still a little behind the curve on getting their systems up to snuff.
Thank you. That was Bloomberg's Wendy Benjaminson from D.C. And coming up on this U.S. Jobs Day, we look at how technology is affecting nearly every sector. We get thoughts on that, as well as how innovation is transforming the job-seeking process with Career Builder CEO Irina Novoselsky. And if you like Bloomberg News, check us out on the radio. You can listen to us on the Bloomberg app, Bloomberg.com, and in the U.S. on Sirius XM. This is Bloomberg. The U.S. added 136,000 jobs in September. It was lower than economists estimated, but the Trump administration painted any softness in the labor market as only temporary, with no recession on the horizon.
I think the economy is now in a turning zone, and I think we've had a soft 2 quarters, but I think now we're going to be moving into a much stronger economic story.
The tech sector is a big part of the jobs picture that's expanding. In fact, a recent Wells Fargo study estimates that robots will cut about 200,000 U.S. bank jobs in the next decade. But my next guest says that while tech is causing almost every industry to evolve, that doesn't mean that there are fewer jobs. With more, I welcome Career Builder CEO Irina Novoselsky from Chicago. Irina, what did today's jobs report tell you specifically about how the tech sector is doing?
Yeah, it continues to really be a tough and tight economic environment. When you look at unemployment rate really dropped to 3.5%, job hopping is at the highest it's been in over 3 decades, with average turnover in companies being upwards of 30% compared to 20% historically. And so technology has to be the solution. And it's really going to be the disruptor. And it's where we've been focusing at CareerBuilder to really embed AI to help candidates and recruiters meet.
And what types of tech jobs are most popular on CareerBuilder right now?
Really around anything having to do with software development and actually not even typical, stereotypical technology jobs. One of the things we talk a lot about is that about 70% of jobs have a technology component, whether it's a customer service rep, a sales director or manager, whether it's a direct technology component like a software engineer, but the healthcare space, even manufacturing has a really big technological component to it these days.
How is turnover within the tech sector?
Really high, and we're seeing that across all different verticals. And one of the reasons for that is when you look at today's audience, the majority of the workforce, about 2/3, is either millennial or Gen Z. And they're moving jobs anywhere from 18 months to 24 months. And so really today, where we're at, the only solution for companies is to leverage tools like our AI connecting and matching and search. Otherwise, it's really impossible to be able to fill jobs that quickly, with 50% of recruiters have jobs open for more than 3 months at a time.
You know, wages have been a big focus here. I wonder, how's wage growth within the tech sector?
Within tech specifically, we're seeing growth in pockets. It really depends. The technology sector is a broad sector, but there's also subsectors of technology in all the other areas that we thought about. And healthcare, we're seeing some salary growth, but really more importantly, what clients and companies are looking to do is tapping into different subcategories where there's oversupply and going in and finding candidates there. But we're seeing actually that really mission, purpose, benefits is outliving really the top 3 components of what candidates are looking for. It's no longer just salary on number one.
And who is looking for jobs? Like when you say salary is not number one, I think millennials and Gen Z, are they the ones out there looking for the most jobs?
They're right now the largest population in the candidate marketplace, but we're actually in an environment, we have 5 different generations in the workforce, which is something that has never happened before. And so where we've spent a lot of time at CareerBuilder is how do we really level the playing field, both for companies and for candidates, and that's making it easier, whether it's to post a job or build a resume online. One of the interesting things that we're seeing from a technology perspective is that at the end of 2017, about 30 to 40% of candidates were looking on their mobile device. Today, that's upwards of 80%. And if a client employer doesn't have an ability for a candidate to apply online, they're really losing a lot of access to today's employee base. And we've made it really easy for them to build a resume with a few steps on their mobile app.
Are companies able to find candidates with the right skills?
Taylor, it's a great question, and one of the things that we're seeing is skills is becoming the predominant search criteria. It's no longer the stereotypical, have you done this job before or not? It's, are the skills matching? And it's also where AI is coming in, because to the naked eye, a certain skill might not look like it matches, but when you look underneath, it actually becomes a great connection point for the overall job. And so it's looking at what can the employee do based on the skills from the previous job instead of just what's written on the resume.
You know, Irina, your latest note was interesting because it talked about employers sort of retraining or upskilling current employees instead of going external to find new employees. Do companies need to do a better job of upskilling their current workforce?
Yes, definitely. One of the things that is not really talked about, and you mentioned it a little earlier, but there's over 1.5 million job openings than there are even people to take those jobs. And so one of the things that we work with the clients that are successful is looking and tapping their employee referral program, leveraging their internal passive candidates. We call that the silver stars, the candidates that you almost gave a job to but just weren't exactly the right fit at the time. We have the ability to leverage AI and tell you where they are now 2 years later, what their skill set is today. And so really looking at all channels of where you can acquire candidates, not just always going to get new, but how do you leverage your existing candidate profile, whether it's active, past, career sites, employee referrals, really across the board.
You've mentioned AI a few times. How is CareerBuilder using AI to make sure that your platform is using all of the data it has to further your business?
Yeah, I'll give you two quick examples. On the candidate side, I mentioned how resumes were really the major obstacle for candidates to apply. We've created a 3-step mobile resume builder. You can type in your job title and it actually pre-populates what your resume should have as accomplishments based on the company, the geography, and your title. So it really makes it easy to create that resume on your mobile device. And then on the employer side, we've done the same thing in bringing the AI insights to the fingertips of recruiters. When you're posting a job, we actually tell you what the candidate appeal score is for that job. So you can change it. It gives you a diversity score. It tells you what the competitive intel is. So how many people are out there, what companies you're competing with, how is a candidate going to view that job posting? Because really, how do we empower recruiters to be able to handle such a tough market? And it's not volume. It's really about quality, and technology is the only thing that can drive that quality.
On this Jobs Day, thank you to Career Builder CEO Irina Novoselsky. And Mark Zuckerberg is hiring. Facebook CEO is looking for, quote, a superstar analyst for his philanthropic venture that's called the Chan Zuckerberg Initiative. The global endowment-style portfolio is looking to hire analysts with expertise in public equities, hedge funds, buyout and venture capital funds, and real estate. That's according to the posting on LinkedIn. And coming up, it's been a tough year to go public. We discuss why Silicon Valley investors are bringing matters into their own hands to redesign the whole process. That's next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. The marketing wars over streaming video are heating up. According to sources, Disney is banning advertising from Netflix across its entertainment TV networks. Netflix spent $1.8 billion on advertising last year. Now it will be playing defense against new services from Disney, as well as those from Comcast and AT&T. And 2019 has been the year of the tech IPO, but not all of them have had hot starts. Many have had crazy high valuations that end up dropping in the 11th hour of going public. It's been such a trend that earlier this week, technology startups and their investors held a closed-door event late Tuesday to promote alternatives to initial public offerings. One alternative is direct listings. Here to discuss, NASDAQ Senior Vice President and Head of the West Coast Listings, Jeff Thomas. So let's talk about this. Direct listings versus IPOs. Is this a structural shift that's going on in the market?
When you look at why companies go public, it's really one of 4 reasons. They need to raise capital, provide liquidity, create an M&A currency, and build their brand. A direct listing can accomplish some, but not all of those. So you can't raise capital with a direct listing, but you are going to create liquidity for your shareholders, especially because you remove the need for an IPO lockup.
I wonder, when we've been talking a lot about sky-high valuations, is it good for your business when we start to shake out some of those sky-high valuations and start to see companies come back down to more normal levels?
Well, one of the big structural changes over the past few years is the amount of capital in the private markets. And that's really driven valuations up for private companies. That sets a new bar and expectations when companies go public. That's one of the reasons we launched NASDAQ Private Market 5 years ago, to start providing liquidity for shareholders before companies go public. Just this year alone, we've done over $2 billion in private secondary transactions.
A lot of people have told me recently companies are staying private too long. Do you agree?
You know, I think there's always, the company has to figure out the right time for them. You want to go public when you're still on that high growth curve, and if you wait till the growth starts to slow, that means there's going to be less gains for the public company investors.
With valuations coming down and all the volatility, has the pipeline for IPO started to slow down?
You know, we still see a strong pipeline for Q4, and we're out talking to a lot of companies that are planning for the first half of 2020. There are still a lot of companies that want to get out ahead of the election next year, and so I think we'll continue to see an active pipeline for the IPO market.
And why is that? Do they expect more volatility after the election?
That's right. If you look at when we get into an election year, there's a lot of media focus on the election. There's a lot of uncertainty. And if there's one thing the markets don't like, it's uncertainty.
I want to talk about some of the specific companies. Wework has been in the news. Was there a surprise or concern that it had shifted from valuation to a corporate governance issue when it came to some of these companies like Wework that at the last hour have to pull the IPO?
You know, we can't talk about anybody who has come public, but what we can say is we have seen some phenomenal entries, especially in the enterprise software space, companies that have recurring revenue models, a defensible position, and you look at some of the companies that have gone public on NASDAQ this year, between Datadog, CrowdStrike, and Zoom, and they're up huge over their private market valuations and doing very well for their public company investors as well.
So it sounds like investors are doing a better job of then differentiating what's recurring revenue, what's not, what's a sustainable business model, what's not. Am I right?
And there was a great post that was put out by Fred Wilson, a notable VC, and he talked about not only the revenue growth, but the gross margin profile of these companies. If a company is going to get valued like a software company, they better have 70 to 80% gross margins.
Okay, so then talk to me. Companies like Peloton, is it a fitness company or a tech company? Everyone wants to be a tech company for the valuation, but what if the margins don't add up?
It's an amazing story because they built an amazing piece of consumer electronics. They have a subscription business, and they've really created a fitness revolution. So it's a really hard company to compare to anybody else in the market.
Do you get more and more companies trying to say that they're a tech company, even though maybe the underlying business doesn't quite make sense that it's a tech company?
Well, the real question is everybody talks about growth. So investors want to pay for growth, but is it sustainable growth? And ultimately that comes back to that question on gross margins, where if you're growing but you're not making money, that's what the investors have to understand is what's the timeline to profitability.
Let's talk about some other companies that have gone public, Uber and Lyft. What happened?
So I think those are both transformative companies that are really disrupting an industry. They've taken on and created a whole new way for people to get around and really revolutionized the transportation industry. They're also companies that raised a ton of money in the private markets, which really created a lot of value for their private investors before they came public. But I think when you look at the future, I don't think any of us could imagine getting around without Uber and Lyft.
And then talk to me about Slack.
So Slack is one of the companies that has executed a successful direct listing, which we started talking about at the beginning. So what that meant was the company just listed their shares on a national exchange rather than trying to raise capital. So why did they do that? They had a lot of cash on the balance sheet. They felt like they were in a really strong cash flow position, and so they didn't need to raise capital. So it was more advantageous to them to create liquidity for all their shareholders rather than use it as a capital raising event.
Final question here. What's your big takeaway? Public markets are getting more smarter than private markets?
I think we'll continue to see capital flow into the private markets until we can adjust some of the regulations that really hamper the ability for companies to go public. And that's why we've been working very closely with the SEC on a number of regulatory reforms. We were encouraged to see that they now allow companies of all sizes to do test the waters meetings, to go out and talk to investors ahead of an IPO to understand their valuation expectations, and hopefully that can lead to a warmer reception in the public markets.
NASDAQ SVP and head of West Coast listings, Jeff Thomas, thank you for joining me. And coming up, job cuts announced at Wework following its failed IPO. We discuss the continued hits the company keeps facing, along with all of the other tech stories out this week. This is Bloomberg. This is Bloomberg Technology. I'm Taylor Riggs in San Francisco. One more jolt for Wework. The new company's leaders told staff that job cuts are coming as soon as this month. Wework's cost-cutting efforts would include layoffs. That's according to attendees of a closed meeting. This comes the same week that the company officially pressed pause on its IPO efforts. Here to discuss this and other top stories of the week, John Maida of Publicis Sapient, and here in San Francisco with me, Bloomberg Technologies, Alistair Barr. Alistair, let me start with you with Wework. Are the layoffs enough?
I think there's a lot more to be done. I think there's a big question mark in a lot of investors' minds about WeWork's business model in general. It's a very tough business to be in when you're spending a lot to lease a lot of buildings on long-term contracts and leasing them out on very, very short-term contracts, where that makes the company very, very exposed to an economic downturn. There's a lot of economic concerns. So I think 2,000 out of, I think, a total of about 12,000. I imagine that the whole goal, right, is to make people relatively comfortable, get the IPO done, and get access to a lot of this other financing that is contingent on doing the IPO.
John, let me bring you in here. What do you make of the company selling off or looking to sell off some of its investments in Wing, selling off a private jet, for example? Is that also another step in the right direction?
Well, I think it's just this general reckoning moment in tech where the ethics question has to be asked. There's a great company, Meetup. If they're let go of this WeWork world, it's pretty sad because some great ideas are living inside that thing. For it to fall apart would be pretty bad.
John, how is WeWork's balance sheet? I've heard from a lot of analysts that they can try to hold off from fundraising until mid-2020 or so. Do you agree?
I think the fact that it's basically a real estate company hides the fact that it's not a technology company. So back to the previous segment you had before, if you try to say you're a tech company but you're not, you'll get bit.
You know, Alistair, one thing that struck me when they were looking at selling off some of the investments in Wing, that seemed to actually align with their core strategy. Does this feel like a fire sale, or are they doing a right job discriminating about what assets to sell off and what assets to keep?
I think any time that a company has to announce that it's going to sell a bunch of things, that's never a good idea. Ideally, you want to do that subtly, and you want to get people who really want to buy those entities. I think it is true that the company is trying to focus on the core short-term space rental company, and it might not be a tech company, but there could be a real estate business that might work in there somewhere.
John, what do you want to see next from WeWork?
I would love for companies like WeWork to emerge that fill in that problem where eventually higher education will fall apart and there's no way for younger people to get started. So I think WeWork was a good idea to get young people together, give them capital, give them space. If those kind of places go away, I think it's going to be very hard for the next generation to succeed.
John, I want to talk to you next about Facebook. And there was the leaked recordings earlier from The Verge that came out about Mark Zuckerberg talking about an Elizabeth Warren presidency. In your opinion, John, how much of a threat to Facebook is an Elizabeth Warren presidency?
Well, I think that we're just asking questions about Facebook itself right now. It's kind of like a casino for emotions. The fact that it can control how we feel. There was that research paper that Facebook released a while ago that's kind of forgotten, where researchers discovered that it's possible to change valence, change how you feel, depending on what appears in your feed. So the fact that this technology can be used to manipulate everyone's emotions is quite powerful. And so regardless of who the candidate will end up being, it's a technology that has to reckon with the ethical concerns.
Alistair, any sense that these extra compliance costs, extra litigation costs from Facebook's end to fight a potential antitrust deal could really impact their bottom line?
I think investors will discount that, even if Facebook spends, I'm just making it up a number here, if they spend $1 billion defending that type of thing over the next few years, investors, I don't think, will care about that. What they really want to know is whether what Facebook does that makes so much money, which is targeted advertising with as John said, with this amazingly powerful platform, will that remain? And I think a Warren presidency, if that ever happens, could be a threat to that.
John, is there a real case to be made for Facebook to be broken up on antitrust concerns?
I think definitely every technology company, once you sort of like unravel it at the big scale, the big tech companies, what are they? Are they big Las Vegas class casinos that can control all of our emotions and what we read, when we feel about things? If you look at it that way, there's a definite problem, and the problem has to get addressed somehow. But is Facebook the only problem? I don't think so.
Well, another problem that Facebook is facing, Alistair, that you brought up was Libra and their cryptocurrency project. And now PayPal has confirmed that they're backing out of that agreement. What does that mean for the future of that project?
So there are 28 original members. I keep calling them members, but actually they just signed a vague contract that said, we'll take part and then we'll join fully a bit later on. And that the real date to watch is October the 14th, which is when the first kind of council meeting of this group gets going, and I think then people will actually be signing contracts, and then soon after that they'll have to hand over actually $10 million, and that's so PayPal pulling out is a blow at the moment. From what we can tell, we haven't seen any of the other 27 companies pulling out yet, but we'll have to see.
John, it was the battle of the hardware phones again this week. Microsoft came out and sort of launched a new foldable phone. I have to ask, why is it smart, I guess, for Microsoft to be getting back into the smartphone business?
Well, what's neat about the devices today is you're not sure what they are. Remember when the big phone tablets were called phablets? So I call this like a folding phablet with a PH, folding phablet. And the reality is that anything could be a phone, just attach headphones to your tablet, et cetera. So I think it's a good thing that Microsoft is coming in not as a phone, but another device that you can carry with you in your purse or in your pocket or whatever. And it's a new way to think about how you live with computing. And you expect Apple to do that, but they didn't.
Thank you, John Maeda of Publicis Sapient and Bloomberg Technologies, Alistair Barr. Thank you both for joining me. And coming up, Brex wants to replace your bank account with Brex Cash. We speak to the co-CEO next on how the fintech company plans to execute this program. Next, this is Bloomberg. In the world of cryptocurrency, PayPal has delivered a blow to Facebook's Libra group. PayPal released a statement Friday afternoon saying it had, quote, made the decision to forego further participation in the Libra Association at this time and to continue to focus on advancing our existing mission and business priorities as we strive to democratize access to financial services for underserved populations. PayPal was one of the original 238 founding members of the Facebook-led initiative. Several members are now wavering over whether to fully embrace the effort. No comment Friday evening from Facebook. Now, fintech company Brex has just announced its new product, Brex Cash. It allows customers to pay for any invoice or bill in one system, earn rewards, and even earn 1.6% interest. Joining me to discuss if this is the future of banking services, it's Brex co-CEO Enrique Dubagras. Enrique, thank you for joining me. Why do you think that this is the right system, combining sort of a cash and a credit and savings in one?
First, thank you for having me. So with Brex Cash, we try to solve all the financial problems of our customers. So no matter how you want to pay, if you want to pay through card, wires, or ACH, or any method that you want, you can do it in one single place. And then the second thing is that banks traditionally, they separate between checking and saving accounts. So you earn less interest on your money as a whole. With Brex, we simplified it into one account that earns 1.6% yield. So there's no more complication of like having one account that doesn't earn, the other one that earns, and you have to move around. They're just 1.6% all the time.
How are you making money?
So we invest all the funds in money market funds, from which we gain a little small fee from that. And also, we believe that by having the same account between card and cash, people will end up spending more on our cards, in which we make money through interchange.
And is the cash insured by the FDIC?
No, the cash is not insured by the FDIC. So we buy money market funds that consist basically of U.S. securities, so government-backed securities. And it's also covered by SIPC insurance.
You know, there's been a lot of new entrants into this marketplace recently. I look at companies like Square and Fundbox and Cabbage. Do you worry that you're flooding the market with too much credit?
So most of Brex customers, they want our card despite credit. So they might get a loan from Square or Fundbox, but they still need a card to swipe and use those funds. And they still need an account like Brex Cash to pay their vendors and employees, etc. So we think that we're giving more of them access to spend their money instead of the credit itself.
And who is your target customer?
So today we target 3 main verticals, which is venture-backed startups, e-commerce companies or online brands, and life sciences companies.
I wonder, do you do better when the Fed is raising interest rates because you can really capitalize on that spread? Or does your business model work better when the Fed is cutting interest rates because rates are lower?
So it's a question we get all the time from investors, and we mostly do better when interest rates are lower because from our card, it reduces our cost. And from a technology perspective, if rates were zero, every bank would be competing for customers in terms of technology and service, and we believe that that's our main competitive advantage.
Brex co-CEO Enrique Dubugras, thank you for joining me.
Thank you so much.
Now, the exemption that the renewable energy world was counting on to skirt U.S. President Donald Trump's tariffs on solar equipment is no more. The U.S. Trade Representative said Friday it was eliminating an exemption carved out about 4 months ago for bifacial solar panels, which generate electricity on both sides. They'll now be subject to the duties Trump announced on imported equipment in early 2018, currently at around 25%. To discuss, I'm joined by Bloomberg's Power and Renewables editor, Lynn Doan.
Hi, thanks.
Lynn, talk to me. How important was this exemption?
For the global renewable energy business, it was hugely important. Just to back up a bit here, in January of 2018, the Trump administration came out with these tariffs against all solar equipment that comes into the United States of as much as 30%. It's now 25%, and that is still huge. 4 months ago, the Trump administration came out and said that they were willing to carve out this exemption for bifacial solar panels. These panels are ones that generate electricity on both sides of the panel, as opposed to just one. The solar industry reacted by saying, well, hey, sure, we'll take that and just start manufacturing bifacial solar panels instead of one-sided, and that will get us around these 25% duties. Unfortunately, today, the Trump administration is saying that that is no longer the case, and they are stripping away this exemption. So the renewable energy industry is essentially back where they started a year ago.
So why? Why strip it?
So the trade representative put out a notice today to say that after they had created this exemption 4 months ago, they went back and looked at the impact on the industry, saw that there were some manufacturers in the United States who were raising complaints about how this would affect their leg up in the domestic manufacturing business, and decided after reassessing it that this exemption was not in the best interest of the U.S.
Who stands to lose here? Is it just that bifacial solar panels? Or are we looking at a bigger portion of the renewable energy sector?
There's a bigger portion. First, there are the Asian manufacturers that make solar panels. These are the biggest manufacturers of solar equipment out there. A lot of them are based in Korea, in China, and they ship over to the United States. On the end user segment, you're talking about big utilities in the United States that are trying to develop huge solar farms here and are going to have to buy this equipment at a higher price now.
Does anyone benefit?
There are a few beneficiaries. They are the ones that have U.S. factories. So after the Trump administration imposed these tariffs in January of 2018, a lot of companies came out with announcements saying, all right, we'll build factories here in the United States. We'll make our solar panels here. Those were the same companies that were pretty disappointed to see that there was an exemption carved out that would have those Asian manufacturers supplying instead. So those would be the beneficiaries of those exemptions being stripped away.
Bloomberg's Lynn Doan, thank you for joining me.
Thank you.
And still ahead, fighting drones with drones. We hear from one longtime Silicon Valley name moving into the future of weapons. This is Bloomberg. Shifting to handsets, HTC says it's innovating across a diverse technology portfolio, including virtual and extended reality. To help the company focus on the future, the company recently appointed Yves Maitre as CEO. Earlier, he spoke exclusively to Bloomberg and explained why his company is more sheltered from the effects of trade tensions than U.S. or China competitors.
We are a Taiwanese company, 100%. Our people are sitting in Taiwan. All our research and development are in Taiwan. We have our own manufacturing plant in Taiwan, so which means that we are pretty independent from the Chinese mainland supply chain, for sure.
Now, for years, the Pentagon and other U.S. agencies have been searching for reliable ways to combat drones posing a threat. It turns out the answer might be quite simple. Bloomberg Businessweek spoke to a longtime tech inventor, Palmer Luckey, about what his business, Anduril, is doing to rekindle the connection between the U.S. military and Silicon Valley.
This is the Interceptor. It's the creation of Palmer Luckey, who might be the world's most unlikely weapons mogul. He's the founder of a multi-billion-dollar virtual reality company. He's also a polarizing figure in Silicon Valley, known for his support of the Trump administration, including immigration policies that opponents of the White House have branded as cruel and even racist.
My name is Palmer Luckey, and I'm the founder of Anduril. I want to build a big company. I want to build a company that's worth billions of dollars. I want to become one of the major defense contractors that's building technology for the United States government. And I'm proud to say that, I'm happy to say that, and I hope we get there.
At his previous company, the virtual reality headset maker Oculus Rift, Luckey had the idea to build a futuristic consumer device combining low-cost components with sophisticated software. He sold Oculus to Facebook for about $2 billion in 2014. 2 years later, just a month before the 2016 presidential election, the Daily Beast reported he'd given $10,000 to a group of Trump supporters to fund billboards featuring insulting messages about Hillary Clinton.
Lock her up! Lock her up! Lock her up!
In 2017, Facebook announced that Luckey was no longer an employee.
I was fired. We can all be honest about it.
It became the rare HR decision to make it into a congressional hearing.
As CEO, have you ever made hiring or firing decisions based on political positions or what candidates they supported?
No.
Why was Palmer Luckey fired?
That is a specific personnel matter that seems like it would be inappropriate to speak to here.
You just made a specific representation that you didn't make decisions based on political views.
Well,
is that accurate?
I can commit that it was not because of a political view.
Anduril has followed Luckey's Oculus playbook, using off-the-shelf components in an industry much more suited to his politics. Over the course of a few months earlier this year, the company built a cheap version of its drone, made a smartphone video, and started showing it to people at the Pentagon.
It's a little crazy, but I think that is definitely the way that it's going. I mean, all these other systems, like where there are people who propose shooting drones out of the sky with a laser or with a missile, or, that's not really a good way to take out, let's say, 100 drones that are attacking you from all different directions. The only thing that can take out a swarm of fast drones is a bigger swarm of faster drones, and that's exactly what we're building. Here's some interceptors. This one has a experimental parachute release mechanism, so that the idea is after it runs into something, if it really destroys its drivetrain, rather than falling to the ground, it can pop a parachute, fall to the ground safely. It pops this thing, pops open, and there's the parachute. I think that's one of the reasons that our customers like us so much. I mean, they're used to going to people who have here's this white paper, here's this idea that we have. We want you to pay us by the hour so that we can research it and figure out if it makes sense. And then if it does, you'll pay us by the hour to make it. And then if it doesn't, you'll pay us until it does work. And we're going to them and saying, we did this ourselves, we used our own money, we got it done in a matter of weeks, and here it is.
Anduril has shipped several hundred interceptors to military bases. It also has contracts with the U.S. Customs and Border Protection Agency to provide surveillance equipment to use at the border with Mexico. Workers at other tech companies, such as Google, Microsoft, Amazon, and Palantir, have all objected to doing similar work, leading to protests by employees and activists. Luckey insists that Anduril's work isn't partisan.
There's a lot of people who I think falsely conflate border security with immigration policy. And I don't care what you believe on immigration policy. Even if you want to have totally open immigration, anyone can come to the United States and instantly become a citizen, you should still want to have strong border security.
The company's surveillance technology consists of large towers packed with sensors and small surveillance drones that can be set up along the border or at military bases to guard the perimeter.
So this is one of our Sentry towers. It is a totally autonomous, solar-powered, infrastructure-independent security tower. So by placing these towers every few miles, you can end up with a nearly perfect picture of everything that's going on in a really large area. And then that data is very easy for an operator to read. These are being used right now by the DoD, by Department of Homeland Security along military bases, the border, and a lot of other critical infrastructure.
Anduril's future success relies largely on the military's continued concern that the U.S. could lose to China in an arms race based on artificial intelligence.
Our technology is far behind the consumer area in many places, and we're also far behind our adversaries in a lot of places. People should be more worried than they are about falling behind, because it's not something that's going to happen someday. It's already happened.
Critics say technologists like Lucky have an ethical duty to stay out of the weapons business, but neither the military nor Anduril's investors share their concerns. The company recently raised a $120 million investment round, valuing it at about $1 billion.
That does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.